Jim, we got the 10-year near 3.2, settled back just a bit, maybe on that Bostic headline that he thinks 50 at a time is pretty good.
Yeah, I just think that what we're up against is that even this morning we were down substantially at 430, 536, and then we rally a little bit. And, you know, that's just tricky. I mean, the Dow was down 540, now it's down 390. I mean, you're not coming in at the low. And I think that we all kind of feel like, you know what, we have to take out levels. Every single strategist this morning was negative. And I tend to believe that what they're right, except for the S&P 500 is doing a lot better than the Nasdaq. And the Nasdaq is filled with companies that are under their cash position or are in danger of going through their cash position. So, not great.
Yeah, Truist this morning, even though half of NAS components are off 50% from the 52-week high. Nasdaq, in a recession scenario, they argue, down 17 to 10K or so. Are you that? No,
I'm not. I mean, because look, this isn't 2020. I mean, the companies that we're talking about are making fortunes, a lot of the big ones. It's just the bottom half of the Russell 1000. It's just horrible. Even the top of the Russell 1000, there's stocks that are down gigantically. But, you know, the larger companies have a lot of cash, and I'm not worried about them. It's the biotechs, which are 37% under cash. If that's the case, then when are they can't raise any money. No one can raise money. So Palantir is a good example. Dramatic slowing, dramatic decline in their cash flow. They have enough, but why is 8 the right level?
Yeah, Palantir is interesting. They reiterated their call for continued revenue gain, but their operating margin is going to go from 30 year on year to maybe 20 in the current quarter.
Oh no, that's just it's. I don't want to call it a disaster but you know, revenue growth 16% from government. That's the slowest. Last year they did they have adjusted free cash flow of only $30 million. They're doing so poorly in terms of of order growth. So I don't know. I mean, look, I don't want to dwell on them because that's kind of a stock you never really heard of if it weren't for Cathie Wood. I'm making you go on like a Teladoc. Again, the competition is just horrible. But then we take a look at a company like Lockheed Martin. I saw Jim Takelet this weekend on Face the Nation. Geez, you know, abundance of orders, really trying to meet demand. That's a classic S&P name. It's doing well. So for every 10 that are bad, there's probably 2 or 3 that are good.
Right. Yeah. In terms of weak demand, B of A has been tracking the mentions of weak demand in earnings calls.
Right.
And like a lot of metrics, takes you back to Q2 of 2020.
Yes. Okay, we were talking a lot about that this morning for the investment club. It is absolutely clear that people want to just repeal the whole game. Every bit of it. First, it was for stay in place, DraftKings. But now those far exceeded that, Peloton. Yep. But now it's just they want to go after the ones that were very good and take them, like the work days. Really great quarter. The larger ones. And, you know, by the way, Tyson Food came out this morning. Mm-hmm. Now, this one is the first one that's the actual break that we might have in that the double-digit gains are, this doesn't sound so good, but double-digit gains are slowing. So the price increases for beef weren't as much, for chicken not as much, pork not as much. Against that, I don't see a lot of negative CPI kinds of numbers, but used cars down. So, I mean, you've got this, you want this race of prices to come down for some companies, but not their earnings to be crushed. It's just very hard.
It is hard. But at the same time, you got some companies that are adapting. This piece we have on Uber and this employee memo that Dara Khosrowshahi wrote, basically looking at a seismic shift in investor demand. They're going to cut marketing spend, incentives. Hiring will become a privilege.
Well, you know what? I was looking for the N5,000 people going to be laid offline. They didn't give us that. The memo Mark Zuckerberg put out last week was very interesting for Meta, where they're basically not hiring the lower-end engineers. They're still looking for higher-end engineers. And I think the perception is, well, they're doing poorly. I think it's the opposite. There's a lot of higher engineer talent going to be laid off. I mean, right now it's going to be a white-collar recession.